Whether you're on the verge of buying your own home or one of the 91% of millennial renters that want to buy a home someday, the process can seem daunting. It would be lovely to skip to the stock photo moment where the realtor hands you a key next to a sold sign. But unfortunately, a lot of other stuff has to happen first. And the more you know, the smoother it will be. So here is an illustrated guide of the path to home ownership, from start to finish. Many people jump right into finding a realtor or visiting open houses. But the most practical first step is making sure you can get the financing necessary to buy. Unless you're purchasing cash, of course. But for most of us, the first order of business is choosing a loan officer. This is the person that will secure a mortgage loan on your behalf. The loan officer will have you fill out a pre-approval application that will include your income, credit history, and current assets. You'll also have to provide things like pay stubs, bank statements, and the last 2 years of tax returns. Be prepared to share more financial information with this person than you do with practically anyone else. In return, he or she will help to match you with the right loan for you and your family. There are many different types of loans, but generally speaking, the better your credit history and the more money you can put towards your down payment, the better your terms will be. The loan officer will also help you to decide how expensive of a home you can qualify for and give you an idea of what kind of closing costs you can expect. Closing costs are all the extra expenses you'll have to pay to finalize the deal, and you should anticipate them to total anywhere from 2 to 3% of the purchase price. Keep in mind that your loan officer is not your financial planner, so it's up to you to decide what kind of monthly payment fits best for you. Keep in mind that you don't have to have all your ducks in a row to start the process. Even if you're not quite ready to buy, they will be happy to help you set up a plan. If everything checks out in a day or two, you will be pre-approved for a loan. And now it's time to start working closely with the other person on your team, your realtor. Your realtor is your personal shopper and your chief negotiator. It's their job to help you find your dream home and help you make a competitive offer. Like your loan officer, your realtor typically works on commission, which means they don't get paid until the transaction is done. So they'll be eager to help you get into your home as professionally and efficiently as possible. Next comes the part most people are excited about, finding a house. After looking at countless homes online and touring interiors, at some point you'll zero in on a home that matches your criteria. So what comes next? You and your realtor will submit a formal offer to the sellers, accompanied by a letter of approval by a loan officer to prove you have the ability to finance the home. If they accept, the clock starts clicking on the purchase process. From here on out, it's important that you don't change anything about your financial situation. Your loan approval is based upon things staying just the way they are, so no changing jobs or taking out new credit cards. The first step in the purchase process is to deposit your earnest money with the escrow company. You will typically give a deposit of 1% of the sales price upfront to show that you're serious. In exchange, the owner of the home gives you a window of typically 17 to 21 days to inspect the home and decide if you want to go through with the transaction. During this time period, you should order the following inspections to ensure you have all the information necessary to move forward towards closing: roof inspection, home inspection, pest inspection, and appraisal. If you do find a major problem, you and your realtor can ask the sellers to repair the issues or adjust your offer accordingly. Upon satisfactory inspections and negotiations of repairs, you get to relax for a bit while your loan officer turns your file over to an underwriter. They are the ones that make the ultimate decision whether or not you qualify and determine if you check out as a trustworthy buyer. Your loan officer will serve as an intermediary between you and the underwriter. And just like you, they will want to keep your file moving along towards closing. So be sure to promptly provide your loan officer with all conditions he or she is requesting from you. Once the underwriter has determined you have satisfied all conditions necessary, you will be cleared to close. It's almost closing day! By this time, your loan officer should be able to give you a definitive number of how much you owe in down payment and closing costs. This money is actually owed to several parties, but you will deliver that money to an escrow company whose job it is to make sure it gets to the right people. You'll also have to sign with a notary to sign a stack of final documents, which are then returned to the lender. Once your signatures and funds are verified, congratulations! You own a home. Even though the process is legally wrapped up, there are a few more things to keep in mind. Your first mortgage payment is typically due the second month after closing. So for example, if you sign your documents on June 15th, you won't have to write your mortgage payment until August 1st. Don't forget about moving costs, professional movers, utility setup and fees. Buying a home is one of the biggest deals of your life. And like most big deals, the important stuff happens early on, like finding the right team to help you navigate the biggest purchasing decision of your life. Find your pro at www.centralvalleyhousesearch.com.